that's just all it is.
Well, and so P-Maxi versus E-Maxi, what is there something that changes for the story Maximus on PulseChain?
Not really. Maybe so I actually expect, well, so in general, I think it's seeing that P-Maxi, E-Maxi ratio versus the E-Hex, P-Hex ratio. That in itself will tell a big story, because it is the market telling us how it is valuing staked hex across the chains versus liquid hex across the chains, where P-Hex, E-Hex is liquid hex, and then P-Maxi, E-Maxi is the max length staked hex. And so those will probably trade differently, because the E-Hex, P-Hex, like that's deliverable today. You hold it's like you're not earning anything on it. You're being diluted at 3.69%. Relative to the E-Maxi, P-Maxi one, where the underlying stake is earning on those at like 30%, and it has its own premium where people are pricing in future earnings, pricing in the benefits, and then like discounting the risks. And so maybe what you see there is that the market may demand E-Maxi more than P-Maxi slightly, because there is perceived to be higher gas costs on Ethereum. So the benefit of pooling the gas cost is higher on Ethereum than PulseChain. So maybe in that setting, you see, a little bit of whatever the E-Hex PX pair is, the E-Maxi P-Maxi one is just like a little bit weighted higher on the E side of it, because people value that gas.
Interesting.
So maybe that's factored in there. Also, it's like, betting on like the certainty that the network will exist in the future, like that's what gives PulseChain such high price potential, is that there's serious risk that PulseChain is not around forever. Something could break. So that future potential of like it going away, that's what gasses up the potential for 100x gains. Like you can only experience 10,000x, 100,000x gains if there's serious risk that it goes away. If there's no risk that it's
like
going to
Ethereum,
go away, maybe the gains are capped to like 100x, 1,000x, which is still awesome. Still can be life-changing performance, but like for those 10,000x, 100,000x gains that it can't have, like any new thing, can't have it. So like, there certainly is risk involved.
Interesting point.
And and that's like the best part. Like if it wouldn't be exciting if there was not that high flying risk. And so maybe the market, because like the E-Maxi, P-Maxi, its value is derived in action that it's going to take in 15 years. Maybe the market's going to price in some of that risk of, because like there's not much like risk of like E-Hex, P-Hex. There's not much risk of like long-term it going away, because it's like the short-term liquid hex deliverable on demand, versus like the E-Maxi, P-Maxi, it's like a receipt to hex deliverable in 15 years. There's a lot more sensitivity around that type of like big systemic risk. So maybe that's baked into that.
That's interesting.
That as well.
Well, I mean, it is. I mean, so with P-Maxi, you're not getting the benefit of the low. I mean, I don't know. In 15 years, let's say PulseChain is still around, kicking ass. What if gas goes up to Ethereum prices, or Ethereum gas is insane, just like 10 times what it is now, and PulseChain is what Ethereum prices are today?
Yeah, and that's reasonable to expect, because if you expect, the blockchains in general to gain users, it's like most of the recent gas. It's like when Hex launched, gas cost nothing because there was no one using Ethereum. It was a ghost town. Hex was the number one. It was like the number one user of Ethereum for like much of 2019 to 2020, like early 2020, and then Hex was the first major use case of Uniswap, and then after, and it was the first major yield farm, major yield producing asset. So like it was the first of all these things that then caused like a huge.
No. BitConnect was the first yield farming asset.
Yeah, other than
And
on Ethereum, the things driving
yeah, that's true,
Ethereum
on
gas
Ethereum.
price up, which maybe, I don't know, was BitConnect the ERC20? I don't even know. Maybe it was.
I don't think it was back then. I think
Okay.
everything was their own chain, pretty
Yeah,
much.
yeah, that was that back then when that was the case. But yeah, I mean, all these things that, like, Hex paved the way when gas cost nothing because there were no users. But then because it paved the way, like Uniswap became a big thing, DeFi became a big thing, and then that drove gas prices to like what seemed to be massively high at that time. And then, then that 2.7 increase in the cost of performing certain functions that made, gas for for certain classes of users even higher. And then NFT stuff came out. NFT stuff is one just like the, sending and receiving NFTs costs more than just the regular ERC20, but also the like minting aspect of it. A lot of these NFT mints created these dynamics where people would have gas wars, where they could ensure that they would get the rare NFT by clogging the network and paying the miners offline to run scripts that identify certain configurations, and then if they see something, like to reject all transactions except for mine.
Oh, wow.
So like there's a lot of that, like a lot of these gas wars going on, causing these networks, just to $1,000 fees to buy, like if you bought at the wrong time.